Today's video is for anyone who's tossed aside a regular 9 to 5 to pursue their entrepreneurial goals on a road to financial freedom. Now, most of us, as you know, homeownership is truly the number one way that Americans can achieve real wealth for themselves and their families. But for self-employed borrowers, the process of applying for the first loan is definitely a confusing and scary task. So that's why I'm here. I've helped hundreds of self-employed borrowers just like you, and together we'll navigate this process. And by the end of this video, you'll know how to apply, qualify, and capitalize on your first bank statement loan. What exactly is a bank statement loan? In the simplest terms, it's basically a mortgage where lenders use bank statements to qualify rather than your traditional tax returns to verify your income. It's truly specifically designed for self-employed individuals, freelancers, and independent contractors who have had solid earnings but maybe face some challenges, right? So those challenges would be written off too much bank or deductions, so their income showing way lower for qualification, possibly behind on their taxes, high business expenses, or maybe even seasonal earnings. Like right now, we're actually doing a loan for a guy that is in a warmer climate area, but he's further north in this warmer climate area. So there's a lot of seasonal changes, right? And he's in the landscaping business. From COVID time when he couldn't find a lot of help, his income declined some. And then now that that's over, it's increased. The labor cost has gone up. Taxes are higher now in the state and other factors that have kind of led him to not being able to file his tax returns for the last 2 years. And with that, he could not get a loan anywhere. He put down a couple $100,000 on a new construction home, and we're going to go down his journey and how this bank statement loan kind of helped him. The bank statement loans really emerged as a response to the challenges faced by some of these self-employed individuals, and it's going to be different than the traditional mortgage market. Okay, we're all familiar with VA, FHA, and conventional. Those, we have to verify everything, all of your income, all of your assets, all of your liabilities. With this bank statement loan, we're going to not verify the income. We're only going to verify the assets and liabilities. So we're still using a debt to income ratio model on this. Now, the popularity from the bank statement loans have really increased significantly. As part of the world's largest wholesale mortgage broker, we kind of see all these different products that are being released on a daily basis, right? And during the COVID time, all these programs kind of went away. No one wanted to touch these. However, now that things have kind of relaxed, the guidelines have relaxed a lot, now we're seeing more and more bank statement loans come into the market. The rates are super competitive on these. Back to the landscaper guy, right? When we did the bank statement loan for him, one of the things is like, he's like, hey, I don't want a crazy double-digit interest rate when rates are going to be in the 7s and 8s. Well, on this bank statement loan, we were able to verify 12 months of bank statements, and we were able to get him something in the 7 and 8 range. It's very, very comparable with that conventional loan. So what are the major benefits of bank statement loans? The flexibility of bank statement loans are going to be for the self-employed individuals with the fluctuating income. That's number one. The second benefit is truly a faster closing on these bank statement loans compared to your traditional mortgage due to the streamlined documentation, right? We're not asking for the taxes. So now that we know what a bank statement loan is and why we want one, how do we get one? Well, lenders typically look for 12 to 24 months of bank statements. Now, this period gives them a clear picture of your income trends and your financial health. We use that to calculate an average monthly income from there, setting the stage for your loan application. So it's about showing stability and the ability to maintain regular income, even if it doesn't come from the form of a traditional paycheck. The application process for a bank statement loan is truly not different from any other mortgage, but with a few tweaks, lenders will examine your financial stability, looking at both the earnings, incoming, and your outgoing. This includes the average monthly income derived from bank statements and any other debt or obligation you might have. Your debt to income ratio remains a crucial factor, just like in a conventional loan application. With the bank statement loans, we are looking for higher credit scores, right? We're looking for conventional borrowers because you're putting more money down on these loans. Having that credit score will lead you to higher success. There are not a lot of lenders out there that do bank statement loans, so it's truly important that you're shopping around and you're looking at all of your different options. We have 220 options. Even with that, out of those 220 options, we're going to have some compression of all the other loans and then bank statement loans. So truly, we may only have about 20 or 30 different lenders that will do bank statement loans. So out of those 20 or 30 lenders, we're going to eliminate half of them because we know that these lenders may not be able to perform in the timeline that we need. Okay. At that point, we're now left with 15. Out of those 15 lenders, I would say half of them are going to have like super challenging overlays or expense factors that we can't use for qualification. So at that point, we'll eliminate half of those now. So now we're left with 7 investors or lenders. And let's just say you have a unique situation, right? Your unique situation is the business is in an LLC, and then you have personal bank statements that we're using to qualify. Now, maybe 4 of them are going to say, you know what, we don't like the structure of this, so we're going to eliminate that too. And let's just say you have a very unique situation. Your unique situation is, I want to take a bank statement loan out. I want to put it in an entity. At that point, you may only have 2 options. So from there, we look at those 2 options and we're like, okay, this lender is going to give us 15 conditions, but they're going to offer a little lower interest rate, let's just say by a quarter. The second one is going to give us 7 because they're going to make exceptions on 3 items, but because of that, it's a higher rate. So at that point, we're going to convey the information to the borrower, and the borrower is going to say, yes, we like it, we want to work with it, or no, we don't, right? Working with a wholesale lender is truly important, especially if you're getting a bank statement loan, because when you're going with that lender that is direct, or you're going with the bank that's doing this, you're going to be subjected to the standard bank statement guidelines and then some crazy overlays that may limit your debt to income ratio, or because they only have that one option, it's going to be a way higher rate. So certainly do all your shopping beforehand, because for those in a time crunch or with less than standard conventional financial situations, some lenders do offer like 1-month bank statement programs or 3 months or 6 months. And this fast track option is truly more subjective. It's going to rely heavily on a single month or a couple months of bank statements of activity to kind of gauge your financial standing. While it is quicker, it's also riskier and way more dependent on the lender's discretion. That's why it's better to go with a wholesale broker who has access to a wide range of lenders. Now, let's go ahead and talk numbers. Down payment requirements and credit score thresholds can truly vary on these bank statement products. We have credit scores that can go as low as 600, down payments that could be as little as 10%. However, generally a higher credit score can mean a lower down payment requirement, and vice versa. As of now, the minimum credit score for most bank statement loans are going to hover around a minimum of a 600 credit score. But remember, the higher the score, the better the terms. So down payments for bank statement loans can definitely range from 10 to 25%, depending on market conditions and lender policies. When your options are limited, always go to the wholesale lender, okay? See how many options they have, because that's truly important. And having those extra options will allow you to save more on the bank statement loan in the back end, because we'll be able to offer a lower rate. At this point, you should have a pretty clear picture as to how to qualify for your first bank statement loan. But if you're still worried, here are some tips that you can put into practice now before we start the process. The first tip that I want to say is we want to separate your business from your personal, okay? I know this may be a shift of mindset. However, you really have to keep your business with your business and your personal with your personal, okay? You have to make sure those deposits are going in constantly, right? So if you have an option to get a check or get cash, if you know you're getting a mortgage, I would certainly get that check, because now we have a paper trail. We have that deposit that's going in consistently. The third thing is that we want to avoid random transfers, right? If you understand what an underwriter is looking for, they're looking for abnormal activity. Okay. And that abnormal activity, such as random transfers, may lead to more questions, and more questions equals more hoops that you have to jump through. The next tip would be, we have to understand how lenders evaluate your income. We see your bank statements. However, it would be really good for you to have a letter of explanation to accompany your bank statement. So the letter of explanation would say, okay, the reason I had all these deposits show up as ATM deposits is because when my employees grab that check, they go straight to the bank and they deposit the check in through the ATM. Okay, that's a good explanation. All right. At that point, if we see a bunch of ATM deposits, then we know, hey, this is what it is. And without that letter of explanation, we're going to go to you and ask for it later on. So if you provide it up front, that's less hoops that you have to jump through. Now, if you're approaching that max on your debt to income ratio, you're approaching that ceiling, at this point, you really need to look at, okay, what debts do I have open? How can I lower the DTI or debt to income ratio so that I can qualify for the amount that I need, right? If it costs you an additional 5%, $500,000 loan, that's $25,000 versus paying off a car that is $10,000 and it would save you $600 a month, at that point, you have to weigh your options out. All right, if I put this extra money in, how much am I going to save? All right, on my monthly payment, and how much is it going to hurt my cash reserves versus paying off the car and bettering that debt to income ratio so that you could spend $15,000 less and still accomplish the same loan amount that you're looking for. And then finally, the last tip is a strong down payment can always relieve pressure off of you and the lender, right? When the non-conforming lenders or non-QM lenders are considering these bank statement loans, one of the things that they're looking at is how much skin do you have in the game? The more skin you have in the game, the more we can offer exceptions, the more we can say, okay, this is a better rate. And with a better rate, that would improve your debt to income ratio. So truly everything is just a chain reaction so that we can guarantee success on your bank statement loan. If you made it this far, you should certainly be confident enough to prepare your game plan and start taking the first steps to applying for the loan. But if you're unsure whether you can qualify, I've got some pro tips for you right here. Number one, let's go ahead and find that trusted tax advisor, right? So even though you're taking this bank statement loan out right now, you got to have an accountant that you can trust very well. So if you have that opportunity to go through and lower that interest rate in the future, having that trusted tax advisor is truly going to be instrumental to your success, right? So we have additional taxes that are being filed now. They're being filed right. And at the point of interest rates going down, if we have to go into another bank statement loan, this will be helpful. However, if we want to go into a regular conventional loan, because we wanted to save on the interest rate a little, you need to find a trusted advisor. Second tip is to go over all of your credit score repair options, whether the loan officer is doing it for you, whether a credit repair company is doing it for you, or whether it's self credit repair. If you know that you're going to go buy a home, always in advance game plan. And one of the biggest game planning options to save you the most amount of money with the least amount of input going in is going to be that credit score repair. Whether you dispute something off, you settle something in full, or you just start knocking out small debts, especially revolving debts and credit cards, at that point, that would give you a higher credit score and in turn give you a better interest rate. On that credit score part also, I will say, I know this is absolutely true because we've actually helped thousands and thousands of people, whether it was before the process, during the process, or even after the process, improve and keep their credit score up. The overlays are really, really important, right? You have to understand the overlays and you have to understand the benefits of not having to deal with the overlays, right? Overlays are basically like this, okay? Let's just imagine this card right here are the guidelines. This is the traditional box that everyone wants on a bank statement loan. However, when you have this box and you have the guidelines, we know what the guidelines are. Some lenders are going to have a halo. These are overlays, okay? So there's going to be a bigger rectangle around this. And those are going to be the additional overlays that you have to crack through in addition to your standard overlays. So it's really important that when you're shopping for the loan, it truly is beneficial to go wholesale because of the options, but it's also beneficial to go wholesale because the cost of lending is a lot less, right? On average, based on 2021 HMDA data, a consumer will save between $8,000 and $11,000 over the life of the loan when going wholesale over retail. So a mortgage broker is the true way to get help on these loans. Next tip is to go for government assistance programs, right? The government is constantly coming out with different stimulus packages, different plans that they can help borrowers to improve their standing and everything. Look into all the government assistance programs. See if you qualify as a self-employed borrower, because if we can take some of those funds at a lower interest rate and apply it towards this loan, it can truly be way more affordable for you to borrow in the long run. Also, go over other loans that could potentially help, right? So, hey, if we take some money out of our primary residence to apply towards the next property, will that help? If we look at a conventional loan instead of a bank statement loan, how can I qualify for that? Or we want to go and purchase this as an investment property. And on the investment property, we want to compare. Is the bank statement loan going to give me a better rate, or is the debt service coverage ratio going to give me a better rate? And if you're buying a multifamily, insider tip, the multifamily DSCRs are going to DSCR a little higher. So that could give you a better interest rate versus the bank statement loan. Now, at this point, you may be wondering, David, is a bank statement loan even worth it? Yes. So Just because interest rates on bank statement loans are typically higher than those on conventional loans, it truly doesn't mean that you should give up. The opportunity and the flexibility offered by a bank statement loan far outweigh the costs. So consider different options on your bank statement loans. Maybe a temporary buy down, maybe an adjustable rate, maybe an interest only term, because you may know, hey, in the next couple of years when the startup business starts flying, we're going to make more money. And at that point, I can certainly refinance out of this. You may want to take up some of these aggressive bank statement options. With the adjustable rates, it's good because you're offered a lower interest rate for a teaser amount of period. And at the end of that adjustable rate, it could go up, right? But it's really important to read the paperwork, understand what you're signing off on, and then really discuss the potential exit strategies from that adjustable rate or the balloon payment or interest only after the fixed period ends. Refinance into that fixed rate mortgage before the ARM adjusts, or you sell the property before any significant rate adjustments occur. Always stay in tune with the market, know what's going on, and watch my channel for like updated news and updates on any of these products. We're not done yet though, because bank statement loans are not just for primary residences. So if you're looking to invest in a property where you're wanting to flip the house or building a rental portfolio, these loans can truly work for you too. It is an excellent opportunity for entrepreneurs like myself to expand on investments and leverage your self-employed income. So these bank statement loans really do offer a great investment opportunity for self-employed borrowers, right? Benefiting off of all the deductions that you've had on your taxes. You've got a lot of money saved up and you want to put it somewhere. These bank statement loans are truly a great investment opportunity because you don't have to stop at just one. You could get that second, that third, that fourth bank statement loan and continue to build that rental portfolio. And here's the good thing about bank statement loans. Once you get the house, you're now going to be able to claim that rental income. And if you have that rental income that you can put on the tax returns, now we're cooking and we may have some additional income that we can use to build that portfolio or just to buy your primary residence. So now that I've armed you with this information and showed you how to use bank statement loans and even gave you a glimpse into your future, the only thing left for you to do is act, okay? So if you're self-employed, dreaming of home ownership, this truly is the path forward. So if you have any questions or you're curious about bank statement loans, leave them in the comments or reach out directly. We're here to help you navigate this journey, and don't forget to like, share, and subscribe for more insights into making your homeownership dreams a reality. So thanks for watching and see you in the next video. David Zai, Mortgage Guy, out.